Ladies and gentlemen, kicking your welcome to the daily update. Hope you guys had a good day trading. Today, market is down about 1.7%. There on the S&P Nasdaq 1.3%, semiconductor 0.6%, Dow, Russell 2000, transport, banks, energy, biotech, healthcare, home builders, utility, retail, emerging market, every single sectors are red today. Bitcoin down quite a bit. Gold, silver miners are up. Dollar up. Oil up. Treasury bond down. The rates are down. The VIX popped about 3%. There, let's stick with the S&P 500 ETF. Spider! 65-minute chart. This is where we closed yesterday. It looks like we actually saw a little bit of move there on the first hour. And that came back down. A little support right here. Fifth hour got up here trying to break above that 400, that round psychological number here. You can see this is exactly the scenario we talked about on the last night's analysis. This is exactly what we didn't want to see for the buyers, right? What it looked like is breaking out, but then it closes under the 600 level that is coinciding with a falling resistance. Again, that 400 level being very much psychological round number and prominent and conspicuous number. And obviously with the Fed minutes, people tend to be a little bit more erratic and panicky.
Perfect.
And so quickly when the 400 was not reclaimed, when we got below, pretty much bottom fell out here and just went straight down. Everybody panicking here. Everybody hitting that exit button. With that, we did break below all the moving averages, the long term, the mid term, the short term, the micro term, all the hard work the bulls have done here in the month of March. As you can see, finally gotten above it, taking several weeks to get there in one day. Everything seems to be breaking below all those supports there. Feel that up gap as well, and now we're trading below all the short-term, micro, all the moving averages. So you can see in the midterm of things, we're still in this bearish sentiment with the lower highs and lower lows. So obviously bears want to continue to kind of utilize that overall sentiment to push it down. Buyers do have something to work with here when I zoom out. As far as the overall sentiment is concerned, as I zoom out here, as you can see, this is what bears are working with right here, right? We got these downtrend going on with the lower highs and lower lows, and this could potentially be that lower high, right? Another lower high here. And what the bulls are trying to work with is this rising uptrend support and these subtle higher lows. Yes, looking at more of a bigger picture and potential higher high. And that's the kind of battle we've been in here since the October lows, right? So since the October lows, that's kind of been the trend here. In the midterm of things, bears are trying to push it down. In the mid to a longer term of things, since the October lows, this is what buyers trying to achieve, that the trend, the subtle higher lows continue. Should there be a continuation to the downside? Is there any support level to be aware of? Looks like maybe small support at 390, but really 380s is going to be the next level right here. That 380 is going to be the next level support, and then 384, and then the rising uptrend support, because there's no moving averages to really support the bulls here. Last time when we lost all the moving averages right here, at least I think there was a very big drawdown, as you can see here. And then it kind of went back up and retested it before falling back down. So maybe that might be in store where you see all these moving averages. This is me maybe going back up to retest some of those moving averages and then see that plunge to the downside. That could potentially be the price action this market is preparing to demonstrate. Let's check out that oscillator. So that oscillator fall back down here. And this time around, we did get higher than previous highs here. We don't have any divergence or anything like that at this time, but bulls are not able to, yet again, get above that, get that oscillator all the way to the top of his band. And we're curling back down. So you can see, though, what we've been witnessing we actually been seeing this kind of a short pullbacks on the oscillator, and then that oscillator kind of crossing right back up. That's kind of been the trend here in the last couple weeks here. But obviously the bears don't want to hear any of this. They want to see that oscillator coming all the way back down, and they do want to see that total tankage. That's what they're kind of aiming going into in the next week or two here. So this is a level, things are looking scary, and that's kind of been the trend in the last, especially what we've been dealing with this year, is that we see these abrupt declines, and then sometimes when the dust settles, and then something happens, and the market somehow finds. I think this is really this is a market where it's really aggravating both the sellers and buyers. You see, we've seen a very abrupt sell-off here as well. You can see that long upper wick here. You see that thing. I mean, that right there, that this pricing really did look like this thing was going to just come right back to the the October lows. But something would happen, right? And then we see a little pop, and then get up, and then we see these big drops, and then bears are expecting to see new lows, and something happens again, and then you see another big drops. And then market gets so we have to understand, not let this kind of a day-to-day this very emotional type of price action to lead us to what may, what I'm saying, just one day move is not gonna establish a trend. So we can't let one day of a market fearing or even like market rallies, we can't, because there's so many times where it looked like the market was ready to reverse back, and we'll see these vertical moves here, right? Think about these vertical bullish move that looked like this thing was ready to just see that V-shape higher, and then something would happen and would just come right back down. And again, so this is kind of it's been the market. This is type of the market that we've been dealing with this entire year. So just having one day of the move to determine what may happen in the next several weeks will be not prudent at this point, just because of the way this market has been moving. It's been the way this market has been moving, it's been very difficult to predict what could potentially happen in the coming day. So what we have to do is we have to really try to figure out what's the overall sentiment of the things, in the short term, the midterm, and the long term, and the primary, and then trying to figure out the bigger picture here versus day-to-day basis. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening. Go train tomorrow.